Welcome to my final morning report chart appraisal on Tuesday the 2nd of June with me, Rich Perry, market analyst at Tech Markets. Let's look at gold and the gold chart. Again, consolidating. We've got a pretty bearish candle actually yesterday, but I'll show you in a minute that on the intraday chart that it's a little bit harsh calling it a bearish candle because it was effectively just a spike up and a spike down that created the continuation effectively of this consolidation that we're seeing, and pretty much that's what we're seeing. We've still got a slightly bearish bias within this trading range, and again I would stress that I'm not anticipating a significant break lower, because I'm still quite impressed how the gold chart is not really succumbing to the dollar strength yet. But it was interesting that yesterday's moves were pretty much in line with the data. You had a weaker than expected consumer spending in the States, and then that drove a dollar correction, so gold higher, and then that was reversed almost entirely, pretty much entirely, by the better than expected ISM manufacturing data. So sharp up, sharp down, and basically zero-sum gain. So we're back into this tight band of consolidation, nothing really doing. Looking for the next catalyst, which could have happened yesterday, but obviously the data nullified itself yesterday afternoon, but still we're looking out for a lot of key data this week, and perhaps you're seeing the consolidation in front of this key data. It looks like it's going to be data driven, I think, the moves on gold, and at the moment we're waiting to see what's going to happen, but certainly I would still say that there is a slightly bearish bias in gold, so rallies are a chance to sell. However, I wouldn't be putting in too great a size, because I think this is a fairly neutral chart across the well, certainly in the last couple of months, 3 months, fairly neutral and not really showing any real direction. And I think it's fairly solidly range bound now. I think it'll need to have a run of either strong or weak data from the US to drive it, because I think it is becoming increasingly data dependent, this gold chart, once again. So watch out for all the data this week, and in the meantime you've got support that comes in from yesterday's low at 84.10, and then subsequently 80.50, with yesterday's rally high at 24.30, sorry, 1,204 spot 30, and then that was below the 112. Well, you've got some resistances at 214 and also 208.60. So just generally a pretty neutral chart still on gold. It'd be nice to talk about something quite interesting, but technical signals are fairly neutral at the moment. So I wish you good luck in your trading on gold, and I will speak to you tomorrow. Thank you.